You didn't come to the market looking for luck. You may have told yourself that at the beginning. You watched someone else catch a move. You saw screenshots. You heard stories. And quietly, without even realizing it, a seed got planted in your mind that said, if I can just get one of those days, everything changes. That's how the myth starts. Luck. You start believing that some people just have it, that timing favors them, that the market smiles on a few chosen ones and ignores the rest. And every time you take a trade that works, you whisper, finally. And every time it doesn't, you feel like you were just unlucky. But here's the uncomfortable truth you've probably felt but never fully faced. Luck doesn't build consistency. Luck doesn't repeat itself on command. Luck doesn't care about your rules, your goals, or your future. What you're calling luck is usually just probability meeting discipline. And when discipline is missing, probability feels random. When discipline is present, probability feels boring. And boring is where the money actually lives. You've seen this pattern play out in your own trading. You wait, you hesitate, you pass on a setup because you're scared. Then price moves exactly the way you expected. And instead of learning patience, your mind twists it into something else. I missed my chance. That was my luck running away. So next time, you force it. You jump early. You size bigger. You justify it by telling yourself you don't want to miss another one. And when that trade fails, you don't say, I broke my rules. You say bad luck. That story keeps you trapped because as long as you believe your results come from chance, you never take full responsibility for your behavior. And responsibility is where power lives, not control over the market, control over yourself. Every outcome you get is built quietly, long before you click the button. It's built in how much risk you decide to tolerate. It's built in whether you wait for clarity or chase movement. It's built in how you respond when nothing is happening. It's built in the small choices you make when no one is watching. The market doesn't wake up and decide to bless or punish you. It simply responds to the conditions you step into. And you step into those conditions by choice, even when it feels emotional, even when it feels rushed, even when it feels accidental. When you start to really accept that, something shifts. You stop asking, why didn't this work? And start asking, what behavior led me here? That's the moment luck loses its grip on you. Because now you're no longer waiting for a break. You're building a process. And the first place that process gets tested is inside your own head. This is where the real fight happens. Not on the screen, not in the numbers, inside you. You already know this feeling. You sit there watching price move and nothing is happening the way you want. Time stretches, your patience thins, and suddenly your mind starts offering suggestions. Not loud ones, quiet ones, reasonable sounding ones. Maybe this is close enough. It already moved a bit. It might keep going. If I wait too long, I'll miss it. That's not logic. That's fear wearing a calm voice. Other days, it's the opposite. You're in a trade and it starts going your way. Your heart rate picks up. You feel that rush. And before the plan even has time to work, your mind jumps ahead. You start counting profits that don't exist yet. You imagine how this win will erase the last loss, how it will prove you're back on track. That's not confidence. That's greed pretending to be optimism. Then there's doubt, the quiet kind, the kind that creeps in after a few losses or even after a few wins, the kind that makes you second guess things you already tested. You hesitate right when clarity shows up. Or worse, you abandon your rules because they don't feel right today. Hope shows up too. Hope is one of the most dangerous emotions in trading because it feels positive. You stay in a bad trade longer than you should because you hope it will turn around. You ignore warning signs because you hope the market will give you mercy. Impatience pushes you into trades you never planned. Revenge pulls you back in after a loss when your nervous system hasn't settled. And every one of these emotions has the same goal: to make you take more risk than you planned. Not always bigger size. Sometimes it's just worse timing. Sometimes it's trading when you shouldn't be trading at all. Sometimes it's staying when leaving would have protected you. This internal war doesn't end by suppressing emotion. You can't turn feelings off. Anyone who tells you that is lying to you or to themselves. The goal is recognition. You need to know what fear feels like in your body. You need to know how greed shows up in your thoughts. You need to recognize the exact moment impatience starts whispering. Because once you can see it happening in real time, you gain a small gap. And inside that gap, you can choose something different. Instead of reacting, you respond. Instead of asking, what could I make? You ask, what am I allowed to risk? Instead of asking, what if this runs without me? You ask, what if I break my discipline again? This is where reasonable risk starts to become real. Not as a concept, as a daily behavior. Reasonable risk is what keeps your emotions from hijacking your future. It's what allows you to stay in the game long enough to actually learn. It's what turns trading from an emotional roller coaster into a professional routine. But you can't protect yourself from emotional decisions without something solid to lean on. And that's where most traders fail next. They trade with ideas, not a roadmap. They have thoughts, hopes, preferences, rules they follow sometimes, rules they ignore when it hurts. And as long as that's how you operate, your emotions will always be stronger than your discipline, because discipline needs structure. Once the inner noise starts to quiet, even just a little, you finally have room to build something solid, not complicated, not impressive, something that actually works when you're tired, emotional, or unsure. You don't need more information. You need fewer decisions. A real plan doesn't try to predict everything. It removes guesswork. It answers questions before emotions get involved. It tells you when you are allowed to act and when you are not. And the most important part is this: it has to be written, not in your head, not something you know, written down where you can't argue with it in the moment. Your roadmap starts with why. Not why you want money, that's obvious. Why you trade the way you do, why you choose patience over action, why you value survival more than excitement. If you don't define that, your emotions will define it for you when pressure hits. Then comes rhythm. When you show up, when you don't, when you're allowed to participate, and when you're required to stand aside. Most damage happens outside of structure. Late trades, board trades, emotional trades. You need non-negotiables. Rules that don't change based on mood or recent results. How much you're willing to lose in a single attempt. How many attempts you allow yourself in a day. What conditions must be present before you even consider acting. These aren't restrictions. They're protection. Your plan should feel almost boring when you read it. Simple words, clear limits, no room for interpretation. If you find yourself saying, well, maybe this counts, your rule's too loose. Daily habits matter too. How you prepare, how you review, how you reset after a win or a loss. These habits shape your nervous system. And your nervous system is the real trader, not your strategy. When your roadmap is clear, something powerful happens. You stop needing the market to behave a certain way. You only need yourself to behave a certain way. And that's when capital protection stops feeling like fear and starts feeling like respect. Because once you have structure, you realize something most people never accept. Making money is optional. Protecting money is mandatory. Every dollar you risk is a soldier. You don't send soldiers into battle without a reason. You don't sacrifice them to emotion. You don't gamble with them to feel alive. Reasonable risk is how you honor your capital. It's deciding in advance what a single idea is worth to you, not what it could make, what you're willing to pay to find out if you're right. Small losses are not failures. They are business expenses. Big losses are usually emotional decisions disguised as opportunity. You don't need to be right often. You need to stay intact. You need to be able to come back tomorrow without carrying the weight of damage you didn't need to take. Daily limits exist for a reason, not because you're weak, because you're human. Weekly limits exist because patterns repeat when emotions go unchecked. Circuit breakers protect you from yourself on days when clarity disappears. Partial profits aren't about fear, they're about reducing pressure, giving yourself breathing room, letting the rest of the trade work without your emotions strangling it. Buffers matter. Space between you and ruin matters. Margin for error matters. When you treat capital with respect, confidence grows quietly, not the loud kind, the steady kind, the kind that doesn't panic after a loss or celebrate too hard after a win. And with protection in place, losses stop being the enemy. They become information. Every loss carries a lesson, but only if you're willing to look at it without ego. Some losses are good losses. You followed your rules. You accepted the risk. The outcome just didn't go your way. Other losses are warnings. You broke discipline. You acted early. You ignored your own plan. If you lump all losses together, you learn nothing. If you separate them, you grow fast. Review isn't about punishment. It's about honesty. What did you feel before entering? What did you ignore? What did you rush? What did you respect? Pain doesn't have to harden you. It can sharpen you. When you face losses without running from them, something strange happens. They stop controlling you. You stop trading to avoid pain and start trading to execute well. That's anti-fragility. Getting stronger because of stress, not despite it. And that's what prepares you for the long road, because this isn't a sprint. It never was. There will be flat periods where nothing seems to work, weeks where progress feels invisible, days where discipline is the only win you get. This is where most people quit, not because they can't trade, but because they can't endure quiet consistency. The long road is built on showing up the same way, whether yesterday was green or red, protecting your energy, respecting your limits, letting compounding do its work slowly. Legacy level discipline isn't flashy. It's boring. It's calm. It's dependable. You become someone who doesn't need excitement from the market, someone who doesn't chase, someone who doesn't overreact. You become steady, and steady traders survive. Steady traders grow. Steady traders last long enough for skill to finally pay them back. Take only reasonable risk, not because you're afraid, because you're serious, because you understand that who you become through this process matters more than any single result. And when you look back one day, it won't be the big wins you remember most. It will be the quiet strength you built by choosing discipline over emotion, patience over impulse, and respect over recklessness. That's the trader you're building, one reasonable decision at a time. You don't feel it all at once when you start changing the way you take risk. There's no dramatic moment where everything suddenly clicks and trading becomes easy. What happens instead is quieter, subtler. You notice that you're not as tense when you sit down. Your shoulders aren't tight. Your breathing is slower. You're not staring at the screen like it owes you something. That's usually the first sign that reasonable risk is starting to take root. Before, every trade felt like a verdict on you, on your intelligence, your future, your self-worth. Wins made you feel capable. Losses made you question everything. That emotional swing wasn't because the market was brutal. It was because the risk you were taking was too heavy for your nervous system. When risk is unreasonable, every tick feels personal. You've lived that, watching price move a little against you and feeling your stomach drop, moving your exit farther because you can't accept being wrong. Staring at the screen after closing a loss, heart still racing, already thinking about the next trade even though your hands are shaking. That's not trading. That's survival mode. Reasonable risk pulls you out of that state. Not instantly, but steadily. It gives your mind room to think instead of react. It lets you observe instead of defend. And once you're no longer fighting for emotional survival, you can finally see your patterns clearly. You start noticing when you're most vulnerable, certain times of day, certain emotional states, after a win, after a loss, when you're tired, when you're distracted. when you feel like you need to make something happen. Most traders never slow down enough to see this. They just keep cycling through damage, blaming the market, blaming luck, blaming timing. But you're different now because you're paying attention. You start catching yourself before mistakes instead of after. You notice the urge to size up and you pause. You feel the impatience and you step back. You sense the revenge energy and you shut the platform down. That's strength, quiet strength, the kind no one applauds, but that changes everything over time. And this is where your identity as a trader starts to shift. You stop seeing yourself as someone trying to win big. You start seeing yourself as someone protecting something valuable: your capital, your time, your focus, your future. Every decision gets filtered through a different question. Not how much can this make, but is this worth the risk I'm about to take? That single question changes how you show up. You realize that not trading is often the most profitable decision you can make. You realize that boredom is not an enemy. It's a signal that you're not forcing things anymore. You realize that missing a move doesn't damage you. Chasing one does. And slowly, without drama, your equity stops swinging wildly. Your emotions stabilize. Your confidence becomes less fragile, not because you're winning every day, but because you're no longer losing control. This is where most people misunderstand discipline. They think it's about being strict, about saying no all the time, about depriving yourself. Real discipline is about alignment, aligning your actions with the long-term version of yourself, even when the short-term version is loud and emotional. The long-term version of you doesn't care about today's excitement. It cares about survival, consistency, growth. It knows that one reckless decision can undo months of progress. So when you feel that urge to push risk, to press harder, to just this once break your rules, that's not intuition. That's emotion trying to renegotiate boundaries. And boundaries only work if they're enforced. This is why written rules matter so much. They become your anchor on days when your mind is noisy. They remind you who you decided to be when you were calm, when you follow them, even on days where nothing works. You win something more important than money. You win trust in yourself, and trust compounds. The more you trust yourself, the less you need the market to validate you. The less you need validation, the less pressure you put on each trade. The less pressure you put on each trade, the better your decisions become. It's a loop, a positive one. Losses still happen. They always will. But they don't shake you the same way anymore. You don't spiral. You don't rush to get it back. You don't rewrite history in your head. You review, you adjust, you move on. And when you do get a good run, you don't inflate. You don't start believing you've figured everything out. You don't loosen risk just because things are working. You stay the same. That consistency is rare, and that's why it's powerful. Over time, something else changes too: your relationship with time. You stop measuring progress in days and weeks. You start measuring it in months and years. You understand that skill takes repetition, that mastery is boring, that confidence is built through restraint, not aggression. You stop rushing your development. You stop comparing yourself to others. You stop feeling behind because you're no longer chasing a moment. You're building a career. Flat periods don't scare you as much anymore. They frustrate you, sure, but they don't break you. You know they're part of the process. You know they don't define you. You keep showing up. Same rules, same risk, same respect. That's how compounding really works. Not just financially, but psychologically. Your patience compounds. Your discipline compounds. Your emotional control compounds. And one day you look back and realize how far you've come, not because of one big win, but because of thousands of small, reasonable decisions. This is what most people never see from the outside. They only notice the results. They don't see the quiet nights where you walked away, the mornings where you didn't trade because your mind wasn't right, the discipline it took to protect capital when ego wanted action. But and that's enough because the goal was never to impress anyone. The goal was to become someone you can rely on, someone steady, someone calm, someone who doesn't crumble under pressure. Take only reasonable risk. Let that principle guide you on days when everything feels clear and on days when nothing makes sense. Let it protect you when emotions spike and anchor you, when confidence wavers. If you keep doing that day after day, rep after rep, you won't just grow an account. You'll build a mindset that can carry you for years. And that's the real edge. The market doesn't reward force, it rewards patience. It doesn't care how badly you want it, it responds to consistency. So stay consistent, stay disciplined, stay respectful of risk, and become the kind of trader who lasts quietly, steadily, on your own terms. There's another layer to this that most traders don't realize until much later. Reasonable risk doesn't just change how you trade, it changes how you live. When you stop gambling emotionally in the market, you start noticing how much emotional gambling you were doing everywhere else. Chasing quick relief, forcing outcomes, reacting instead of responding. Trading wasn't the problem. It was just the place where everything showed up the loudest. When risk is controlled, your mind gets quieter. And in that quiet, you start hearing things you couldn't hear before. You hear fatigue. You hear distraction. You hear when you're not mentally present enough to make good decisions. Before, you would have ignored those signals. You would have traded anyway, hoping discipline would magically appear mid-trade. But discipline doesn't show up under pressure if it wasn't there before. Now, you respect those signals. You understand that some days the best trade is rest. Some days the most profitable decision is protecting your energy. Some days showing up means doing nothing at all. That's maturity, not weakness. This is where the idea of taking risk fully matures into managing exposure, not just financial exposure, but emotional exposure. You stop putting yourself in situations that demand heroics. You stop testing yourself just to prove something. You stop trying to force confidence through action. Confidence becomes quiet, grounded, stable. You no longer need to feel brave. You just need to be prepared. And preparation looks boring from the outside. Same routine, same limits, same rules, same restraint. But boring done well is powerful because boring survives storms. When volatility picks up, you don't panic. Your risk is already defined. When things slow down, you don't get desperate. Your plan already accounts for that. When results wobble, you don't spiral. Your identity is no longer tied to a single outcome. That's when you realize how dangerous, unreasonable risk really was. Not because of the money it could take, but because of the person it was turning you into. Reactive, anxious, impulsive, dependent on external validation. Reasonable risk pulls you back into yourself. You become someone who can wait, someone who can accept being wrong without self-attack, someone who can walk away without feeling like they failed. And that version of you doesn't just trade better, that version of you thinks clearer. You stop lying to yourself about why you're taking a trade. You stop dressing impulse up as opportunity. You stop pretending you don't know when you're breaking your own rules. Honesty becomes easier when the consequences aren't catastrophic. That's one of the biggest gifts of small, reasonable risk. It creates a safe space to tell the truth. You can say, I was impatient. You can say, I wanted to get back at the market. You can say, I wasn't focused. And you can say it without shame because the damage is contained. Contained damage teaches. Uncontained damage traumatizes. Most traders are traumatized, even if they don't use that word. They flinch at setups. They hesitate when clarity appears. They sabotage good decisions because their nervous system associates trading with pain. That's not a skill issue. That's an exposure issue. Reasonable risk retrains your system. It teaches your body that trading doesn't equal danger, that losses are survivable, that discipline keeps you safe. And once your body feels safe, your mind can finally do its job. You start executing more cleanly, not because you're forcing it, but because you're not afraid anymore. You're not bracing for impact every time you click. This is what people mean when they talk about trading in the zone, but they skip the part where that zone is built slowly through respect for risk. It's earned, not discovered. And the earning happens on the hardest days, the days where nothing lines up, the days where you feel flat, the days where you want action just to feel something. Those days shape you more than the exciting ones ever will. Because every time you choose restraint over impulse, you reinforce an identity. I am someone who protects capital. I am someone who follows rules. I am someone who doesn't need to force outcomes. Identity is powerful. It guides behavior even when motivation fades. Years down the line, that identity is what keeps you steady. Not excitement, not confidence spikes, not hope, just consistency. You stop asking the market to change your life. You let your habits do that instead. And slowly, without drama, results follow. Not explosive, not cinematic, sustainable. You won't feel it day to day. You'll feel it in hindsight. When you realize you've gone months without emotional blowups. When you realize you trust yourself again. When you realize trading no longer drains you, that's when you know you're on the right road. The long road isn't about endurance through pain. It's about designing a process that doesn't require suffering to succeed. Reasonable risk is the foundation of that process. It's the difference between surviving, trading, and living with it, between fighting the market and cooperating with reality. If you hold on to this principle, truly hold on to it, it will protect you when ambition tries to outrun wisdom. It will slow you down when ego gets loud. It will keep you intact when uncertainty shows up. And over time, it will shape you into someone calm, reliable, and resilient, not just a trader who makes money, a trader who lasts. And that's the quiet victory most people never reach. At some point, if you stay on this path long enough, you'll notice something that might surprise you. You don't think about risk the same way anymore. It's no longer a number you tolerate or a rule you reluctantly follow. It becomes instinctive, natural, like checking the road before crossing. You don't argue with it. You don't negotiate with it. You just do it. That's when you know the habit has sunk in. Earlier in your journey, risk felt like a restriction, something holding you back from what you could times make. You looked at it as a ceiling, a limitation, a reason you weren't where you wanted to be yet. But now you see it differently. You see risk as a container, a boundary that keeps your decision making clean. Inside that container, you're free. Outside of it, chaos lives. This shift changes how you approach opportunity. You stop trying to extract everything from every move. You stop needing each trade to matter. And when trades stop needing to matter, you stop forcing them to. That's a paradox most traders never understand. The less you times the trade to work, the better you trade. Need creates pressure. Pressure distorts perception. Distorted perception leads to poor decisions. Reasonable risk removes need. And without need, you finally see clearly. You start noticing how often you used to trade just to relieve discomfort, boredom, anxiety, frustration, doubt. Trading was your way of doing something instead of sitting with uncertainty. Now you can sit. You can wait without feeling like time is slipping away. You can let setups come to you instead of chasing them. You can accept that some days offer nothing and that nothing is still a valid outcome. That level of patience isn't natural. It's trained. It's trained every time you choose not to break your rules, every time you accept a small loss without trying to fix it, every time you stop for the day when your limits are hit. Those moments don't feel heroic. They feel uncomfortable, anticlimactic, unsatisfying. But they are the moments that build you. Most people are addicted to intensity. They want trading to feel dramatic. They want highs and lows because it makes the experience feel meaningful. But drama is the enemy of longevity. Longevity comes from stability, from systems that don't rely on emotion to function, from habits that work even when motivation disappears. And reasonable risk is what makes that possible. As time goes on, you'll notice that your reactions soften, losses don't sting the same way, wins don't inflate you, you don't swing between extremes. You start feeling level. That doesn't mean you don't care. It means you care in a healthier way. You care about execution, about discipline, about showing up correctly, not about being right. Being right used to matter so much to you. Every trade was a test, a judgment, proof of whether you were good enough. Now, being right is secondary. Being consistent is primary. That shift alone frees up so much mental energy. You stop replaying losses in your head. You stop imagining alternate outcomes. You stop asking what if over and over again. You accept what happened, learn what you can, and move forward. Forward motion becomes smoother when you're not dragging emotional weight behind you. And here's something important you need to hear. This calm you're building isn't fragile. It doesn't disappear during losing streaks. It doesn't vanish when conditions change. It doesn't depend on recent results. It's rooted in process because you've seen by now that results come and go, conditions shift. Periods of clarity are followed by periods of confusion. That's normal. What isn't normal is staying grounded through all of it. That's what sets you apart. You're no longer trying to control outcomes. You're controlling inputs, your preparation, your risk, your behavior. It's the only control you ever had. When you stop fighting that truth, trading becomes simpler. Not easy, but simpler. You stop asking the market to meet your expectations. You meet the market where it is. Some days that means participating. Some days that means observing. Some days that means stepping away entirely. All of those are valid. There's no guilt attached anymore. No sense of falling behind. No urgency to catch up. You trust your path. And that trust didn't come from success. It came from restraint, from choosing reasonable risk when it would have been easier to gamble, from choosing discipline when emotion was loud, from choosing long-term survival over short-term excitement. This is what real confidence looks like. Not bravado, not certainty, quiet self-respect. You respect yourself enough not to put yourself in harm's way unnecessarily. You respect your time enough not to waste it on impulsive decisions. You respect your future enough to protect it from your present emotions. That kind of respect changes you. It shows up in how you think, how you plan, how you respond to stress. You stop rushing. You stop reacting. You stop trying to prove anything. You just do the work. And over the years, that work adds up, not in a straight line, not without setbacks, but steadily. You'll have moments where you look back and realize how different you are from who you used to be, how much calmer you are, how much clearer, how much more patient. And you'll realize that the biggest win wasn't financial. It was becoming someone you trust, someone who can handle uncertainty without panic, someone who can face loss without breaking, someone who can grow without rushing. That's the trader you're becoming when you commit to reasonable risk. Not overnight, not dramatically, but permanently. And that's worth more than any single trade will ever give you. Eventually, you reach a point where you stop trying to fix yourself through trading. That's a quiet turning point. Before, every loss felt like a personal flaw you needed to correct immediately. Every win felt like proof you were finally doing something right. Trading was tied tightly to your sense of worth, even if you never said it out loud. Reasonable risk slowly untangles that. You begin to see trading for what it actually is, a decision-making environment, a place where uncertainty is normal, a place where outcomes are never guaranteed, no matter how skilled you become. Once you accept that fully, you stop taking things so personally. You stop asking, what does this say about me? And start asking, did I do what I said I would do? That question becomes your compass. Some days the answer is yes, and the result is red. That no longer confuses you. Some days the answer is no, and the result is green. That doesn't impress you anymore because you understand something now that most never do. Outcome without discipline is noise. Discipline without outcome is progress. You begin to value clean execution more than emotional relief. You care more about following your process than chasing a feeling. That shift protects you during periods when the market feels unforgiving. And those periods will come. There will be stretches where nothing seems to work, where every idea feels slightly off, where patience gets tested not by chaos, but by dullness, slow days, sideways movement, long waits. This is where unreasonable risk whispers again. It tells you to spice things up, to try something different, to push a little harder, to break the rhythm, just to feel alive. But now you recognize that voice. You don't argue with it. You don't shame it. You simply don't obey it. You understand that boredom isn't a signal to act. It's a signal to maintain structure. Structure keeps you safe when motivation fades, when excitement disappears, when the novelty of trading wears off. Because trading was never meant to entertain you. It was meant to reward discipline over time. The traders who last aren't the most passionate, they're the most stable. They don't trade because they feel like it. They trade because conditions align with their plan. And when conditions don't align, they protect capital without resentment. They don't feel deprived when they sit out. They feel professional. You're moving toward that version of yourself now. You're learning that walking away isn't quitting. It's choosing not to bleed unnecessarily. You're learning that doing less often produces more clarity. You're learning that restraint builds confidence faster than aggression ever did. And this carries into how you review yourself. Your reviews become calmer, more honest, less emotional. You're not looking to punish mistakes. You're looking to understand patterns. You start seeing trends in your behavior instead of isolated events. You notice what leads to good execution. You notice what precedes mistakes, fatigue, overconfidence, frustration, distraction. And instead of trying to power through those states, you adjust around them. That's wisdom. You don't demand perfection from yourself. You design systems that work with your humanity instead of fighting it. That's what reasonable risk really is. It's not about limiting your potential. It's about respecting your limits so your potential has room to grow. Over time, your trading becomes quieter, less dramatic, less emotionally charged, but more effective. You stop needing to tell anyone what you're doing. You stop needing external validation. You stop measuring yourself against others. You measure yourself against your own standards. Did I protect capital today? Did I follow my rules? Did I respect my limits? If the answer is yes, the day was a success, even if the result wasn't. That mindset is incredibly freeing. It allows you to detach from short-term noise and focus on long-term development. It allows you to stay grounded during drawdowns and humble during growth. It keeps you balanced. And balance is what allows compounding to do its work, not just financial compounding, psychological compounding. Your patience compounds, your confidence compounds, your clarity compounds. Small improvements stack quietly. You don't notice them day to day. You notice them when you look back and realize how differently you handle pressure now. You realize you don't panic the way you used to. You don't chase. You don't spiral. You don't self-sabotage nearly as much. That's not luck. That's the result of thousands of small decisions made in favor of restraint. Reasonable risk doesn't make you timid. It makes you intentional. It doesn't slow your growth. It stabilizes it. And eventually, you understand something that once felt impossible to believe. You don't need to rush. There is time. As long as you protect your capital, as long as you protect your mindset, as long as you protect your ability to keep showing up, the market will still be there tomorrow and the day after that and years from now. The only question is whether you will be. Taking only reasonable risk is how you make sure the answer is yes. Not because you avoided opportunity, but because you respected the process enough to survive it. And that's how real traders are made.